and welcome back to another video. I'm just going to explain a little bit about A&A Capital and how you can avail of our services before we dive into the video. So this is our website. You can just go into aacapitalltd.com and you can read about us over here. And one of the main features that we have is we have a free public channel for all the people that are interested. So all you do is you just go back and you just click the Telegram button or the phone, whichever you prefer, and then click allow, and then that will bring you to our Telegram group. Now, you can also read about us. You can also read about why you would like to choose us. You can see our services. So we offer all these services, including trading and education. And if you have any queries, you can drop us a message. Our WhatsApp links are here, our email is here, and our Telegram is here. Make sure to follow it for the educational content on there as well. And if you would like to purchase any service, so for example, if you want to go to our trades journal or if you want to read more about it, just go on here and you can read about what's on offer. You can also purchase our Forex course through this button and our mentorship. So we offer one-to-one mentorship to any clients that are interested. Have a read about that and you can purchase it over here as well. If you want to read about getting affiliated with our company, then you can have a read and fill out our form and we'll get back to you as soon as possible. And then have a read of our reviews as well. So we have our reviews over here. Have a read of those from clients, and then you can decide yourself if you're interested as well. Hope this helps. Now let's get to where I'm going to be sharing a new strategy with you guys. And this is a very common strategy that we use at A&A Capital. It's part of our A&A intraday strategy that we use. So it's called the A&A double whammy, which is part of the A&A intraday strategy. So let's dive straight into what this strategy is about. Now, obviously, this is going to be an institutional strategy because we at A&A Capital are institutional traders, how the big banks and the large institutions trade. So, when the big banks and the large institutions put their money into the market, they leave certain signals, they leave certain paths, they leave certain signs to allow us to know what the institutions are doing. It's unavoidable because obviously they wouldn't want to release what they are doing, but it's unavoidable because these are signatures that they leave. So one of the signatures is part of our A&A double whammy strategy. So what is the double whammy? Well, essentially what happens is when institutions are trying to reverse price, you have institutional order flow. So institutional order flow is in a certain direction. It's either bullish or it's bearish. Are institutions looking to buy or are institutions looking to sell? Now, you can tell that through order blocks, higher highs, higher lows, etc. Breaks of market structure, return to origin, etc. Now, what happens when institutional order flow won't be bullish for a long period of time, or it will be bullish for the higher time frame, but on a shorter time frame it may be bearish to take liquidity. So these are common signatures that are left. So essentially, when institutions want to reverse price to take liquidity, they leave certain signatures. These signatures are what we use in the A&A double whammy strategy. So let's dive straight in. So we know that for the past while, the dollar Canadian, the US dollar CAD, has been quite bullish, right? What do we see? We see higher highs, higher lows, higher highs, and then obviously where short-term liquidity is resting is under short-term highs and short-term lows. They're obviously getting taken, and then we see price going higher, 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 obviously long-term. Now, as price continues to go higher and higher and higher and higher, it attracts the attention of retail traders who think price is going to continue higher. What happens then is institutions don't like retail traders winning. They obviously want to take liquidity. Liquidity is all the basis of the retail traders losing money. Now, the more price goes higher, it's been attracting the attention of retail traders. They think price is going to continue higher. What happened here? There was a double bottom and a lot of retail traders would have bought. There was a break of market structure, a lot of retail traders would have bought. There was a triple bottom, a lot of retail traders would have bought, right? Now, what happens is before another big move that happens in a certain pair, all the retail traders should technically, from the institutional perspective, be taken out of the market. Whether that's sweeping equal lows or whether it's sweeping short term liquidity, that's obvious. So on the dollar Canadian, we can see a perfect example of our double whammy strategy. This is a great way to know that the institutions are looking to take liquidity. What do we have? We have a big push down, right? So we know that institutions had short orders here. How do we know that they have a short order here? Because it's not a small move like this move. It's not a small move like this move. It's not a small move like this move either. It's not a small move like this either. It's a pretty sharp move with strong bearish candles. So what do we know? We know the institutions had sell orders going down. Now, what happens is, as price moved down, we can see, this is their signature. This is where they placed their original institutional orders that I've marked out here, because we see a long push down. Now, you may think, well, a lot of retail traders would have thought that price is now going to continue higher because of this triple bottom. Yes, possibly. So what happened was, once we broke this structure, it's called buy-side liquidity because a lot of buy stops would be resting there from institutional traders because they would have thought that the resistance turned to support. What did we see? We see a big push up. That is to entice the retail traders after a break of structure. And then we see the big bearish move down. Now, this is part of the ANA double whammy because we see price going down, right? The institutions have their massive millions, billions of they sold their dollars to buy Canadian dollars. And then what happens is they want to neutralize the existing sellers because some sellers would have sold from this double top. Where would their stop loss be? Their stop loss would be above this structure high if they're conservative, targeting a very mediocre 1-to-1 for the retail traders. What else would they be doing? Well, they might be selling over here with this wick on top. They would be selling over there. What did I say at the start of the video? Institutions don't like retail traders winning. So what do they want to do? They want to neutralize all existing traders. So once you have the first institutional move, that is an indication that the institutions are looking to go short. They're accumulating short orders here. Then what happens is retail traders have stop losses, right? To just in case the market doesn't move in their direction. Institutions do not have stop losses because they are the market makers. So they neutralize all existing sellers by sweeping, by making a massive move higher and enticing the buyers as well. That massive move higher is above their original institutional orders because they know that the sellers have their stop losses around here. So you're neutralizing all that while their original sell position is in negative because they know that eventually price will come down because they have further sell orders resting after the existing retail traders have been neutralized. They have their sell orders resting here. So let's go back over this. What do we see? We see an institutional move downwards. We know that is an institutional signature. What do we see then? We see price shoot above that because we want to neutralize all existing sellers. Then we see the original move after the existing sellers have been neutralized. Why am I quite strongly passionate about this sell? Because I believe it will happen. Why? Because there's an additional confluence. If this move just happened here and we took this liquidity, it would have been lower probability because it would have filled the buy side imbalance, sell side inefficiency, and then price could have moved higher. That might not have been an institutional move. Well, so why am I favoring this even more? Because there's further confluence to it. Any trade you take, there needs to be confluence to ensure a higher probability because trading is all just probability. Now, we have equal lows. Double bottom formed a triple bottom, right? So we know that retail traders, if price comes down here, we know that retail traders are going to be buying. We also know that a lot of buyers have their stop losses resting over here. perhaps they bought over here for a stop loss to entry, or from a move previously they've moved their stop into profit. So we know there's a lot of liquidity resting below these equal lows, so we know it's going to be taken. Another thing is that from a lot of backtesting about this strategy, where the original move ends, that should be your final target for the ANA double whammy strategy. So this original institutional move ended over here, right? Over here, and then we saw the push up. That is where equal lows are. So that is an additional layer of liquidity. So we know the price will come down because from backtesting, I know that price typically comes back to where the original move ended, and there's also equal lows. Equal lows or equal highs above an area of imbalance is a very high probability, because an imbalance is where price shoots up without having a wick come down, or where there's inefficiency in the market, where there's too many buyers and not sellers. So we want to induce sellers over here because there were too many buyers. How are we going to introduce sellers? Well, if we have short-term liquidity like equal lows above an imbalance, that suggests that there is a higher probability of that imbalance being filled. If you go through your back testing, now what I tell you should not just be the holy grail. You should back test this yourself, because obviously trading is not a very easy task. You need to have confidence in these strategies, because when it arises, you may not have the confidence to carry it out straight away or immediately. So what am I looking? Well, I explained why this is our long-term target. This is a bullish OB. Why? Because of fractured order flow over here. So I know that if I'm going to be, fractured order flow. I know that if I'm going to look for longs, it's going to be over here. Once it hits here, finishes off my personal second target, I know that the price has the probability to come lower. So I'm not going to continue to sell. Why? Because there's an imbalance from which price could continue higher, and there's a bullish OB where I'm going to look long. Why? Because there may be orders resting over there, because we took short-term liquidity and we broke institutional order flow. So what am I looking to happen out of this US dollar CAD? Because obviously I don't want any educational videos to just be from what has already happened, because that's not really educational. I want to explain what might happen in the future as well. So this is my extended target. I know price is going to come here because there's an imbalance below structure or short-term below equal lows, which is an area of liquidity. So once we've neutralized, there's no reason for us to go back higher, because we've already neutralized the existing sellers from after the original institutional orders. Now there is a mitigation block. If you look at an optimal trade entry, it's around the 62 to 79 retracement level. And over there on the 70.5 retracement level, there is a mitigation block because we took liquidity from that level. What happened here was, if we go down to the 1 hour time frame, we can clearly see an imbalance that needs to be filled. We can see an area of liquidity. What do we have over here? We also have a retail double top, or on the institutional world, we like to call it equal highs. Because again, as I explained, it is an area of liquidity. So equal highs, not a plus imbalance, sorry, equal highs. So we also took liquidity below the equal lows as well. So what am I expecting to happen? I am expecting price to come down further. What have we done today? We took the previous weekly low. This was the weekly low, right? We took that, a little bit of liquidity. Then I don't believe that is enough of a take. So I believe price is going to come lower again to take these lows, previous daily low, form the weekly low on Tuesday that is common. Then we're going to move price higher. As price moves higher, there is equal highs. If you're looking to go long, would be your first target. Second target would be just below the mitigation block, around I would just go to the buy side liquidity just to be safe. And then this is where I'm going to be looking to go short. And then targets would be the equal lows that I explained over here. So if you want the first TP, that would be your first TP. If you want the second TP, The structure level below that would be the second TP. Third TP would be obviously the final target that I've explained. Now, if price does come up to here, which I believe it will, because what happens is this is where our orders of liquidity originated. What did we see? We saw a small push. That push would have continued higher because there was a bullish order block. Now, why did it not continue higher? Because the institutions had sell orders that would have originated here. So we know that if price comes to this area, there's a very high probability of it coming lower. Why? Because we have an area of liquidity just above it, just below it, sorry, and we also have an imbalance. That's a very high probability of a mitigation block lined up with a bearish order block. So what am I expecting? Let's recap. I am expecting for price to come down here. I've explained that already. I expect price to take liquidity again. So we have potentially a retail head and shoulders, take the liquidity, move higher to take those stops, go to the bearish order block lined with the mitigation block, perfectly lined up with the 70.5 sweet spot in the optimal trade entry. And finally we should aim to take first targets would be the low after the liquidity is taken, second targets would be the structure low below it, and finally the final target is equal lows. So to recap, ANA double whammy strategy. You have an original big move in the intended direction that is against the order flow. Then price goes above or below the original institutional orders to take out all the existing retail sellers or retail buyers. And then you know that you should be targeting shorts once you see a strong move. Once you see that institutional orders have been originated again over here, have been taken again over here above the original institutional orders, you should be looking for any confirmation that can line up, whether that be a mitigation block or whether that be a an order block in the intended direction. You refine it down to a lower time frame, and if you have any confirmation, take it after you get confirmation from that block. So we have an ANA Supreme confirmation that gives us a max stop loss of 2 pips refined down to the 1 minute time frame, and then we typically take a trade of minimum 1 to 20 or 1 to 30, but I'm expecting this to be a little over 1 to 100 trade, because we've been waiting on this for quite a while now, almost more than a week. So yeah, hopefully you guys understand the ANA double whammy strategy. If you do have any other questions, please feel free to drop them in the comments. We also released a new analysis channel in our Discord group to the public. So we have our premium members, but our public members can now access all our analysis that is updated every single day before our trading day. So we update and we send all our analysis in. So if you don't want to go premium, we do have, or if you're looking to go premium but you don't know about us, you can go in and join our Discord server. I'll leave the link in the description. And we have our analysis channel there. You can regularly see it. It's available for the public and it's updated every day. So you can have a look before it, just to build some trust. So hope this video is beneficial for you guys, and I wish you the best of luck in your trading. Thank you.